Hey, welcome to the 40 Finance channel, everybody. Got a big few weeks coming up here in the stock market as earnings start to trickle out. We had the banks last week, but now we're starting to get into the good stuff, which is going to tell us where is consumer demand right now and where do companies see it going in the future. So to kick off this earnings season, I thought I'd take a look at the FAANG stocks, also going to include Microsoft in that bunch. I'm going to share with you what analysts are thinking for the FAANG stocks, and then I've kind of put together my own projections to share with you as well. So let's have some fun and try to predict where FAANG stocks land after the upcoming earnings calls. Reminder, as always, that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research before investing. And of course, if you like stock market analysis like this, please subscribe to the 40 Finance channel. Give this video a like. Thank you to everybody for your support. All right, so today is April 19th. Some of the earnings that will come out at some point here: IBM, Coca-Cola, United Airlines. But what we're focused on is the FAANG stocks, which kick off tomorrow, Tuesday, April 20th. Netflix coming in after the bell. So that's the first of the FAANG stocks that's going to be reporting. Then you have to jump ahead into next week for the rest of the bunch. I think it's on Tuesday. Yeah, on Tuesday we have Microsoft and Google coming out. So this is the 28th, Wednesday, April 28th. We have Apple and then Facebook. And then on Thursday, the 29th, we have Amazon. All right, so let's pick these off one by one. Tomorrow is Netflix. Here's where the stock stands today, $550. Current PE ratio of 90.52. Trailing 12 months EPS of $6.08. And you can see 1 year ago, I guess during middle of the pandemic or so, you were at $4.15. And Netflix, as you can see, goes through its shares of ups and downs. People always worried about Disney and their content strategy and everything else. But right now you're sitting at $5.50. We go to the analysis tab on Yahoo to see what are the expectations. And I'm going to skip down to the earnings history for Netflix. And you can see the thing I like to look at is the surprise percentage. And that just tells us over the past few quarters, how has Netflix done in surprising the street? And interestingly enough, for Netflix, they typically disappoint to some degree. So you can see minus 5%, 12%. This is on a quarterly basis. If you look back at December, you had an estimate of $1.39. They actually came in at $1.19, so that was minus 14%. All right, so that's their history. Now for this quarter, folks are projecting, our analysts are projecting $2.96. Low estimate of $2.71, high of $3.02. And then the current year, so the current fiscal year of 2021, and this is what I'm going to use in my projections that we'll get to in a little bit. All right, so where it stands right now, this sort of early in the fiscal year, 989. But if we go down to the trend for the year, which is which way our analysts projecting, you can see it both on the quarter and the current year view. You were at 904 just 90 days ago. And now you're already up at 989. So my EPS projection for Netflix is actually 1025 as of right now with the information we have. But I'm going to land for the current earnings call. Depending on what happens there, I'm saying at least $10.25 for the fiscal year 2021. All right, taking a look at tip ranks to see what the best performing analysts think. My affiliate link is in the description for tip ranks if you are interested in learning more about the platform. And we want to get our freshest ratings, right? So I'm going to go down here. Netflix has a ton of coverage. So I'll start here 5 days ago. You got mostly buys if you go through here. You do have a couple holds. Price range anywhere from plus 6% all the way up to, looks like plus 27% is the high bar for this one. So generally speaking, analysts are positive about Netflix looking ahead over the next year. All right, next up we got Microsoft. As you can see on the one-year chart, they've had a heck of a run over the past 12 months, and even more so here in the last several weeks, if you will, as you get up into 258. PE ratio today of 38.58 and an earnings per share of 671. All right, taking a look at what analysts think is going on with Microsoft. And again, we go down to earnings history and check out their surprise percentage. And Microsoft, certainly over the past 4 quarters, has outperformed analysts' expectations, including the end of the year last year. The projection was 164. They came in at 203. So a very strong last 4 quarters for Microsoft. As far as this quarter, you got analysts coming in at $1.77, putting their current year estimates at $7.40. All right, let's scroll down and see where the trend has been over the last 90 days. The consensus estimate has went from 676 up to 740. And so given the combination of the surprises that Microsoft has given us, as well as this general upward trend in EPS, I'm coming in at $8.25 for my fiscal year 2021 as of right now for Microsoft. And it'll be interesting to see where that lands. At the end of this video, we're going to take my EPS projections against the forward PE average, and we'll see what's different between my projections and the analysts. All right, on the tip rank side of things, about 8 days ago, we got a slew of analysts coming in here, and all the analysts have buys. And let's see, price targets 275 up to about 300 for Microsoft. All right, now checking out Google, who also had a great 12-month run like so many stocks. PE ratio of 39 today. EPS over the last 12 months of 58.61. Check out what the analysts think here. And we go down to the surprise percentage. And Google looks like they had a rough Q1 last year, like so many other companies, but they have come out strong on the surprise line over the past 3 quarters. Look at that, plus 23%, plus 45, plus 40. That is beating the analyst projections by quite a bit, actually. We look ahead to this quarter, and the consensus lands at $15.66. with a current year of 69.24. Now, when we go down to the trend, past 90 days, 61.51 is where this thing started. Now you're up to 69.24 for the fiscal year. And given the rate of surprise that Google's been running at lately, I'm going to go ahead and say $80 is going to be my projection for 2021. Again, this is for the end of the fiscal year. $80 from my camp for Google. All right, looking at tip ranks to see what analysts think for Google as far as price targets. We did get a slew of fresh updates here 25 days ago. You've got buys across the board, anywhere from a 2% upside all the way up to a 29% upside. That would be $2,900. So quite the spread there, right? $600 spread, $2,350 to $2,950 for Google. All right, next up we have Facebook, price of 302, P ratio just under 30 at $29.94, EPS of $10 a share. And Facebook, like everybody else on the board, had a great year last year, although they did hit a pretty tough plateau here around 265 for a while, but it has recently broken out of that space, getting as high as $312. All right, looking at earnings history for Facebook, very similar to Google in the sense that they had a tough Q1 last year, but coming out of the gate strong after that, plus 29, plus 41, plus 20% on earnings surprises. And if we go up to this quarter, you can see that the average estimate is $2.36, and the current year is projected at $11.31. When we go down and look at the trend for Facebook, started at $10.49, you're at $11.31 now. We know that we've had multiple surprises. We also know that we don't have, it doesn't appear to be as much of a controversial year anyway, without elections and COVID and all those things. So I'm going to say that Facebook actually lands at $13 by the end of the fiscal year. And most of that is based on the fact that everything is pointing up for Facebook right now. And I think that it'll be a quiet year for them. They really need one where they stay out of the news and just go about their business, and hopefully they'll get to that. So my bet is $13 a share. All right, next up we have Amazon, price of $33.78 right now, P ratio of 80.76, EPS of $41.83. And Amazon, if you follow it, this is a stock that I actually recently bought. Got in a couple shares right about this $3,000 level, and it was stuck in a rut too, where it just it came off of a huge jump into the summer. Then it kind of dipped a little bit, and it stayed at this plateau again, if you will, right around $3,200. Dipped into the new year, and now it's recovered back up to 3,377. All right, on the analyst front, you can see from a surprise percentage, Q1 was tough for them. Then they surprised by 600% for Q2, then plus 67%, then plus 94% on the earnings. So very, very strong earnings in the back half, or I should say 3 out of the 4 quarters last year. We go up to this quarter, the average estimate is $9.48, and the estimate for the year right now is $47, call it $48. And when we look at the trend for this company, $45 about 3 months ago, $45.50. It's trending up. It's now sits at $47.70. And all the research that I've done on Amazon prior to buying the stock, I'm actually going even higher than this. I'm going to $55 for the EPS here in 2021. I think Amazon has continued to outperform the naysayers, so I'm putting $55 as my bet for the EPS at the end of the year. All right, taking a look at Amazon in tip ranks, and we did get some good updates here, some fresh updates. We'll start, let's just go here. 18 days ago, you have buys across the board, 18% upside here. Looks like the high is 24% upside at $4,200. The low is a 10% upside at $37.20. All right, last but not least, we have Apple, currently at $134.52. You have a P ratio of 36.49, EPS of 3.69, and 1 year chart headed in the right direction. You did have this flat spot here in February and into March at about 120. It's since broken out of that and is sitting at 134 right now. As far as surprise percentages go, Apple has beat analysts every quarter, or honestly, it seems like for a long time, but not as big as some of the Amazon and Google beats, but you still have basically double digits in 3 out of the 4 quarters. So Apple continues to surprise. We look at the trends, and this is current quarter. Analysts are at 98 cents. That's up about 8 cents over the past 3 months. As far as fiscal year, 401, you're now at 446. And for my estimate, I'm going to say they land at $5 for the fiscal year 2021. All right, taking a look at Apple. In tip ranks, once again, we've got some good updates 13 days ago. It comes right here. All buys up from there. 153, which is a 13% upside. that goes as high as 30% to 175 for a couple analysts on here. So all strong ratings for Apple right now. All right, so I put all these stocks together on the TipRank stock comparison board. Just gives us like an eyeball of where everybody stands. They all have an upside to them. If we're going by percentages, here you can see 14.39% for Apple. If you're going by percentages, Amazon has the highest consensus in TipRanks. The lowest, technically, would be Google. And when you look at the PE ratios, you can see the difference. You basically have Netflix and Amazon trading in a different valuation zone than the others, which are in the 30s. But all strong buys, except for Netflix, that actually has 3 cells on the board somewhere. And that's really interesting for me because I think Netflix is one of the better plays, or one of the more undervalued plays out of FAANG, if you will. So with that, let's look at my price projections for these FAANG stocks. Okay, so for my projections, I am using my own EPS estimates and my own forward PE average that I'm projecting to get to a stock price, right? So this is my forward EPS estimate that I talked about when we were on each stock page. So Facebook, $13, Amazon, $55, Apple, $5, Netflix, $10.75, Google, $80, and Microsoft, $8.25. So I do believe in all cases those forward EPS numbers are more than is currently projected for each company, mostly because those projections go up over time. The next thing I did was take an average forward PE from the past couple years, and I'll show you what that looks like. So let's see, this is Apple, and we are on their annual valuation metrics, right? And so with Apple, if you look at their forward PE, up until a couple years ago, that was 13, 11, 12. It was really hovering around the low 10s, if you will. But that has jumped up quite a bit here in this so-called new stock market, if you will, where valuations are running high. So just eyeballing this a little bit, you had a forward PE of 17 back in 2019. Today's forward PE is running much hotter at 30. So for Apple, let me go back to my sheet. I did back a couple notches off the current, and I landed at 28. That was my projected forward PE at the end of the fiscal year. So with Apple, $5 EPS, $28 forward PE, my price target, which is my PT, is $140. That is only $5.68 above today's price, which is a lot different than they have in TipRanks. That's what this black bar is up here. So Apple, that's current price. Analysts are projecting 153. So I'm definitely coming down a little bit from the TipRanks projections, but mostly because I'm saying the forward PE for a lot of these stocks is going to come down as the year wears on, not because they're bad companies, just because I believe that the market is running valuations that are too high right now, to be honest with you. And I think Apple will do their part with earnings, but the price that people will pay for stocks, I am anticipating will come down by the time Apple reports their Q4 numbers. All right, so with that example, it's easy to do all the others. Facebook, my earnings per share, again, higher than currently projected at 13. My forward PE of 25 gives Facebook a price target from my desk of $325. That's about $22.32 above today's price. Now, Amazon, forward PE of $55. Truth be told, I think that this could be 60, but I'm going to be reasonable and say 55. Forward PE of 60. This is another one with Amazon. I do believe it could go higher than this, but I'm leaving it in a normal range. So 55 by 60 gives you a price target of 3,300. That's $72 less than today. And I'm an Amazon bull. So I have a feeling when it shakes out, this will go up. The forward earnings estimate will go up. I'll show you something interesting here on Amazon's forward PE. All right, back on Yahoo, forward PE for Amazon over the past several years. This is not quarters, this is years. You have anywhere from a 129 over the last several years down to a 58 in 2019. All right, so Amazon's valuation multiple has actually come down over the past 2+ years, right? So if it ever spiked back up, similar to 2016 or 2017, then this stock could easily go through the roof. But even at a 69, it would be more than my price estimate today. All right, back at my targets, let's go to Netflix. Forward EPS, I'm projecting 1075. Forward PE of 60. My price target then comes in at $645. That is $97.58 above today. And it is actually the one stock where I am higher than Tip Ranks, I believe. Their best performing analysts come in at 618, which is a 13% upside or so. I'm coming in at 645 for almost another $100 on Netflix before the end of the fiscal year, or excuse me, after they report their fiscal year. All right, next we have Google, forward EPS estimate of 80, forward PE estimate of 28, my price target 2240. That's $42 less, $43 less than the price stands today. We look at Tip Ranks, and you have most analysts coming in around the $2,400 range. So I'm sandbagging a little bit on Google. Again, the forward PE, I actually project it coming down. So that's the big difference in what I'm saying versus what Tip Ranks is saying in most cases, is that the forward PE comes down. I have bullish theories on EPS for all these companies. I'm over projecting what analysts assume, but I'm saying the stock market valuations come down slightly and stocks are not trading at the same multiple as they are today. All right, lastly, we got Microsoft, 825 forward EPS, forward PE of 30. That puts you at $247.50. That's $11.50 off where we stand today. Looking at the Tip Ranks analysts, they're at $284. So big difference, I guess, between me and Tip Ranks on Microsoft. And that's not surprising. Microsoft is trading from a valuation standpoint much higher than it normally does. Great company, great long-term buy. But I do think that multiple comes down, and inevitably that will shake this price up some. All right, guys, so those are my price targets for the FAANG stocks heading into earnings. It's going to be interesting to hear what the CEOs and CFOs have to say about each company. Perhaps more intriguing will be their outlook on 2021. At the end of the day, though, I think all these stocks are great long-term buys. You really can't go wrong. Just manage your cost basis, look for opportunities on dips like you would any other stock, and that's always going to be your best opportunity to maximize short-term ROI. But for me personally, as the year goes on, I do expect valuations to come down a little bit. I think that earnings will be just fine for most companies, but any way you look at it, the stock market is trading on historically high valuations. I think the FAANG companies in particular will hold up their end of the bargain for shareholders by producing strong earnings per share. But when you have folks bring their valuations down that they're willing to pay, just naturally the stock price goes down with it. All right, guys, let me know what you think about FAANG earnings coming up over the next 7 to 10 days. who will be the winners, the losers, etc. Leave a note in the comments. Please give this video a like if you enjoyed the content. We'll see you on the next video.